This is Business Incorporated. Thank you for joining us on the program. I am Bosun Amafaye. Now let's spend the next 30 minutes together. Coming up, the World Bank has decided to lend Zambia more than $100 million to reduce environmental health risk in polluted mining areas and support the country's economic diversification. Meantime, North Africa's largest economy, Egypt, is receiving second $1 billion loan tranche from the World Bank. Meantime, sticking with North Africa, Morocco's central bank sees growth recovery in 2017, but decided to leave interest rates unchanged. Let's start with the markets as usual. Of course, the African market is focused. Cairo's stock index with the Egyptian stock market surged about 3.4%. On Tuesday to a record high, climbed further today in a bull run ignited by the foreign fund inflows and the floating of the Egyptian pound that was on November the 3rd. The telecom giant Orascom, beaten down in recent markets by news of the departure of the managing director, Sawiris, gained almost 6% after the company says it sold its Middle East unit, a North African company, Submarine Cable Systems, for $90 million to an Indian company. Proceeds of the sale are to be used to invest in the financial, real estate and logistics sectors, which may boom under Egypt's current economic reforms. Now you can see some of the Africa's big markets trading there. Nigeria still trading water since we started the week, about 0.2%, losing that 27,000 index level. The South African Stock Exchange, the JSE, moving ahead above that 15,000 level by almost the same margin as the Nigerian Stock Exchange. The Egyptian market today, 1.25%, and the Kenyan stock market off track by about 0.04%. Now, step into the Middle East and look at the Gulf stock markets dragged edge up early today ahead of the release of Saudi Arabia's state budget for 2017, which is expected on Thursday, that's tomorrow. The Saudi stock index was higher about 0.3% in the first 90 minutes. Of trades, but just what the figure looks like about an hour ago, almost positive in some of the markets. The Abu Dhabi market was, however, flat, but the Saudi market negative by 0.07%. Dubai financial markets about 0.5% in the green. We're still taking a look across markets around the world today, from Africa to the Middle East. Now let's cross over to Europe, where the Swedish central bank is leaving interest rate unchanged at a negative 0.5%, and that's expected. And of course, the Eurozone will know some of its data today. That's the consumer confidence figures. Quite a number of news coming from the banking sector, but let's get more from Conrad Bursen, who is DWTV financial correspondent for Channels Television at the Frankfurt Stock Exchange. Conrad, good afternoon. Let's have this session wrap around the entire banking space within the euro area. In France, a number of banks are suing the European Central Bank. That's quite interesting, over capital requirements. What's the story behind this lawsuit? How is it playing out in the market?
Well, this, among the stories from the banking sector that we have to talk about today, Bosun, is the most politically sensible one, and one that all banks in the Eurozone will pay very close attention to, at least those banks in the Eurozone that have the European Central Bank as their major supervisor or, ultimate risk management control entity. The basic question is whether or not the French banks will have to provide capital buffers for all the deposits of its clients, even those deposits which are 100% backed by the French state. The European Central Bank says yes. The French banks say this is ridiculous. Why should we provide security in cases where the French state provides security? Why is this so politically sensible and so important to all of the other banks in the Eurozone? Well, all banks in the Eurozone are sitting on deposits on assets which are backed by the states. For example, government bonds. If you were a bank until now, and if you held this government bond in your portfolio, you didn't have to provide capital buffers. This is about to change, and it's a big problem for the banks.
Yeah, interesting. The banks are one day in trouble, the other out of it. So let's cross over to Switzerland. Look at the story there, part of Europe, where a handful of international banks have been fined about close to 100 million US dollars for conspiring to rig key interest rates over several years, stretching back to around 2008, 2009 global financial crisis. This is interesting, coming from Switzerland, of course, a country known for its solid banking sector.
Absolutely, and a country known to be very friendly to banks and very accommodative for banking business. In the past, the Swiss banks often made businesses that many other European countries didn't think was legal. Of course, this has changed. But this case, too, shows that Switzerland is quite friendly when it comes to, penalizing negative behavior by the banks, because the amount of money that the banks have to pay here, in euros it's 93 million euros, is very small, given the impact of the rigging of interest rates that those banks, and I name them, JP Morgan Chase, the Royal Bank of Scotland, Deutsche Bank, Citigroup, Barclays, Société Générale and Credit Suisse, the rigging that all those banks made, because the interest rates that they rigged have so much influence and on so many, loans that are given out to ordinary people, on many banking products that you and I might want to buy. And given the huge penalties that banks had to pay, especially in the United States, billions of dollars, those 100 million euros in Switzerland is peanuts. So it might not come as a surprise to you that at least some of those banks commented on this and said that they are very pleased to have settled the matter.
Interesting. Conrad, $100 million, and bank says they are pleased to settle the matter. Interesting. But, let's have this one. The Italian embattled lender, Monte dei Paschi, raised 500 million euros. Watching the news yesterday was like, oh, perhaps this wasn't going to come, but now looks like the money is flowing through into this troubled lender. But it needs as much as 5 billion euros before December the 31st. So, do you think the fundraising for Monte Paschi is going on as planned, and $5 billion could still be raised before we say Happy New Year?
Well, investors are very, very skeptical whether Monte dei Paschi will really manage to put into effect this capital increase alone. Today, the bank itself reported that it only has capital for another 4 months, so money's running out. And news agencies report that insiders told them that Monte dei Paschi only managed to get 500 million euros via this bond swap, which was planned to be part of that recapitalization program. 500 million euros via the bond swap probably wouldn't be enough for the bank to really get through with this capital increase alone. So probably, and that's what the market is playing at the moment, the Italian state will have to step in. That's not going to be positive for the shareholders, and that's why the shares in Monte dei Paschi are plunging downwards again today.
Very interesting. Looks a bit of too big to fail. But of course, we have the days ahead to go over this story together, and the rest making rounds across Europe. Thank you very much for all the time being there for us from GWTV, Conrad Busson today, and in the week for Channels Television at the Frankfurt Stock Exchange. Do have a great day, and see you tomorrow.